All right, everyone, it's time to have a little heart-to-heart talk today. It appears to us, and the talking heads are finally saying out loud, we are in a bear market. What does that mean for us? More than likely, it's going to be very difficult to make any money in the stock market in 2022. I hope we do, but we're getting more and more doubtful as the weeks go by. Here's the good news. This is accumulation year. 2022 appears to be the year we build a wider base that will exponentially accelerate wealth going forward. Many of the stocks that we've been buying have already massively bled out. So where's the bottom? No one knows. Can I say that again? Nobody knows where the bottom in this market will be. The only thing we can do is dollar cost average into companies that we have the highest convictions, lowering our cost basis. It will probably be painful in the short term, but just know this, with every share purchased, you'll be widening that investing base that will allow you to build your wealth quicker when the market does turn around. During the Berkshire Hathaway annual shareholders meeting that just happened, we heard a couple of things that definitely caught our attention. Mr. Buffett said he missed the March 2020 opportunity to buy the pandemic dip that turned around and produced a V-shaped recovery. A lot of people made fortunes there. He also reiterated that he had never been able to time the market. As you've heard him say before, buy great companies when it's on the operating table and be greedy when others are fearful. He also said to buy when there's financial blood in the streets. Well, guess what? Berkshire Hathaway deployed a massive amount of capital in the first quarter of this year. What does that tell you? He also talked about inflation and how it swindles from almost everybody. We certainly are all reaping the whirlwind when it comes to inflation. No one escapes inflation because we all have to eat and buy energy. It feels like death by 1,000 cuts. Let's talk about a few specifics now. Berkshire bought more shares of Apple during the first quarter. There was a moment in Q1 when the price was cheaper than it is right now, but not by much. Opportunity? We think so. Apple will probably drift lower. We've actually heard it said that $138 to $148 may be the bottom. Mr. Buffett also bought more Chevron and Occidental Petroleum, which signals to us that he feels like energy will be the play for some time into the future. When you think about it, nothing happens without energy. We all know there is an energy revolution going on, but in truth, it's going to take decades to convert completely to renewable green energy. There's still money to be made in oil stocks. Listen to this tweet by Elon Musk just a few days ago. Since I've been asked a lot, buy stocks in several companies that make products and services that you believe in. Only sell if you think their products and services are trending worse. Don't panic when the market does. This will serve you well in the long term. That's some really good investing advice from the richest man on planet Earth. So let's look at some companies, products, and services that meet these criteria. Nvidia is a global leader in artificial intelligence, hardware, and software. Now let's think, will there be more or less AI needs in the future? Will there be increasing demand for semiconductors going forward? This is a no-brainer, guys. These products and services are best in class and will be in demand for decades. Nvidia is down over 30% in the last 30 days. Wow. Opportunity? We think the answer is yes. We are ready to dollar cost average as the price drifts. Now let's talk about Palantir for a moment. We've been buyers of Palantir since the direct listing fall in 2020. We just keep adding to our holdings. This company is a powerhouse that has incredible software products that are helping other companies be more efficient in almost every sector. They are one of the very few most trusted data analytics companies in the world. Palantir works hand in hand in most sensitive areas of the United States government. Will this company be growing in the years to come? Absolutely it will. Is it time to be buying more shares in 2022? Palantir's price is currently less than 50 cents above the direct listing price of $10. Palantir is a much different company now than it was in September of 2020. It's bigger and better. We are buying here and will continue to dollar cost average as the year rolls on. Now let's talk about genomic stocks. Look at CRISPR, Invitae, and PacBio as a basket of 3 stocks. In the last 12 months, CRISPR is down 61% to just over $50 per share. Nvidia is down 84% to only $5.60 per share. Pacific Biosciences is down 77% in the last 12 months to $6.75 per share. These three companies are revolutionary in the genomic space. DNA sequencing, testing, and gene editing are their proficient capabilities. Would it shock you to hear that their combined market capitalization is only $6.75 billion? That's right. All three, PacBio, Nvidia, and CRISPR combined are priced less than $7 billion. Let's compare that to some other companies' market caps for context. Starbucks' market cap is $85 billion. As much as we love our coffee, Starbucks never cured disease or saved a life. Does that help you realize how low these companies are being priced by the market? NEO's market cap is $31 billion. Robinhood's market cap is still at $9 billion, even after being cut 23% in the last month. These are just three companies to give you a sense of awareness about the opportunities in the genomics space. Not financial advice, just something to think about. Again, PacBio, Nvidia, and CRISPR combined are valued at $6.75 billion. Opportunity? We think yes. Look around. Is there a more exciting company than Tesla right now? First quarter numbers were outstanding. The new gigaplants in Austin and Berlin are open and ramping up. The Optimus humanoid robot is being designed and prototyped. The Cybertruck is coming, as well as the Tesla Robobot that will revolutionize the transportation system as we currently know it. With Tesla, catalysts are everywhere you look. Some people cite the recent Elon Musk Twitter deal as a distraction. He also sold around $8.5 billion worth of Tesla shares in order to facilitate the Twitter deal, which caused a substantial drop in the Tesla share price. Shareholders have also made it known that they are not happy about Tesla stock being leveraged by Twitter. Just yesterday afternoon, a story broke about Elon working with private equity firms and high net worth individuals about partnering up to buy Twitter. Tesla stock responded positively to that news. We have read a lot of articles and watched many videos here on YouTube about Elon's decision to acquire Twitter. The one piece we haven't heard anyone talk about will be his ability to advertise Tesla on this social media platform. Elon has decided in the past there's no need to advertise Tesla. The vehicles sell themselves. After all, the waiting list is long if you want to order a new Tesla. However, if Elon buys Twitter and turns on all potential faucets, there might be a future day when Twitter becomes a giant advertising platform for all of Elon's businesses. Will the economy and stock market turn around anytime soon? We sure hope so, but we just don't see any near-term signs pointing in that direction. Inflation is high, interest rates are going up, supply chain issues persist, China is on lockdown, and that's creating a long-term problem. The war rolls on, there's going to be a food supply shortage in the near future, and fuel prices are at all-time highs. The Fed meetings this week are going to go a long way toward determining the near-term direction of the market. Hawkish, and the market moves lower. Dovish, and the market may rally 8 to 10% in the short term. The current administration doesn't seem to have any direction or ability to lead us out of the hole that we're in either. So let's see what this week has in store. In our best opinion, at least for MoonShot Money, the markets are going lower before this is all over. Going back to my opening remarks, 2022 looks more and more like the year to just keep on accumulating the stocks that we have the highest conviction about and wait for the economy, inflation, and the political climate to turn around. Bear markets take some time. They don't recover in a flash. You know you're in a bear market when there's nowhere to hide and all sectors are being brought lower. When we see the mighty FANG stocks, Apple, Amazon, Facebook, Netflix, and Google begin to roll over and be attacked, you know it's a bear market. They have been holding on for dear life, but the bears are getting nasty. We were taking small bites here and there on high conviction stocks, and we are planning on buying more as the price drifts lower. March 2022 was the worst month since March 2020, which was the pandemic shutdowns, just to give you some context. Hey, follow us over on Twitter at MoonShot Money 1. If you've enjoyed this video, please give us a thumbs up and consider subscribing below. Right here's another great video to give you some further insight into some great companies. I'll see you in the next one.